Hey guys, good morning. This is Scott Criss and welcome to your mortgage rate forecast for August 23rd. So what's happened over the last couple weeks? Well, we've actually seen interest rates go down 0.03%, so not worth writing home about, but it is good news, especially compared to what we saw in October, November, December, January with these strong interest rate increases. So where are we headed though? That's the real question right now, right? Well, here's the technicals. Bonds are up about 22 basis points since my last report 2 weeks ago. That's only, about 25 cents or a quarter of a point, so that's not really anything spectacular. But today could be a great day, and I'm going to get to that when we hit into the charts. But why are we seeing this? Well, jobless claims are low, which really isn't bond friendly, but we are seeing housing market nationally seem to kind of soften. So the FHFA National Appreciation Report did show a 6.5% increase annually. But the thing is, guys, we're seeing rents increasing. In fact, over the last 6 months, a report came out showing that rents have increased 4.1%. Well, that's accelerating. That's showing that more people are renting and less people are buying. So that's, I think, another indicator that we are starting to see a little bit of softening in the markets. And this, of course, does impact bonds. So let's get over to the charts and see where we're at. As far as our upper trading channel, if you take a look at my mouse here, July 30th was really the bottom, and then we're pretty consistently in this upper trading channel. And I should have probably put a top on this for you guys to kind of see where you're at. But we're coming right up on a pinch between today, tomorrow, and so we're gonna break one of two ways. Either we're gonna break above $102 or we could break below. So I'm thinking trading over the next day or two, especially with the Fed coming out and gonna be speaking here pretty soon, who will, by the way, likely increase the short-term rate. So here's what I'm thinking. If we watch closely with the bond market over the next day or two, and let's see if we can break that 102. If we can, there's a lot of room up here, especially if we can get up past about 102.10. So that means we could see a continued increase. But if we can't break past this 102 mark, and especially let's say 107, 110, then we could actually see the bonds go down, I believe, to about 101.50, 101.55. So I think the next 2 days are going to be key, and everybody's going to be listening really closely to what they're saying in the Fed meeting. So where are the analysts at? Well, short term, seems like they're either neutral or a little bullish, but it's just carefully bullish. Again, because when you get to the technicals, the big question is, can we break 102? That's a big deal, guys. And so I think if we can, then I would definitely be putting my chips on the table and saying, hey, let's see where this ride's gonna take us. If we hit 102 and keep pushing and can't break through, then I would be very cautious, guys. So that's where we're at. Still long term, we have the quantitative easing. We have, sorry, you're probably sick of me saying that, but we have a lot of things in the big picture that I think are putting pressure on bonds. So I would be careful in the big picture. Here's my forecast. I think bonds between now and 2 weeks from now, my next report, are going to hit about 102.20. We're currently trading at 101.97, so that's room for about 23 cents in a gain, but a room for a loss of 101.55. Now, if it was me, I would stay really close with my mortgage advisor, stay on them on a daily basis over the next few days at least, just to say, hey, what are bonds doing? And then I would probably make my decision whether to float or lock from there, because we are at a pretty pivotal point right now. Okay, so that's it for this week, guys. We'll see you in a couple weeks. We'd love to hear from you. Leave those comments down below. Hit us up with questions. We always respond to our viewers' questions. And before you go, don't forget to hit that like button, and you can subscribe at the top left, okay? And if none of this made sense to you, you're new to the channel, it's okay. Over at your top right, that's going to be Mortgage Bonds 101, and that'll teach you the basics that you need to know when you're trying to pick the best time to lock in your mortgage rate. Anyway, that's it for this week. We'll see you in a couple weeks, guys. Take care. Bye-bye.